enable.
Hello and welcome to Season 5 of NSE FinWiz, powered by CNBC TV 18. I'm your host Mridu Bhandari and we're here to tell you all about personal finance and wealth management. Do you know that a little bit of smart planning and investing can go a long way in helping you achieve your life's goals? Well, that's why we're here to help you link your life's dreams with your financial goals. Today we are coming to you from the offices of a leading tyre manufacturing company from India. We're at the office of JK Tyres in New Delhi.
Since 1974, JK Tyres has become synonymous with radials, whether you think trucks or buses in India. The tyre manufacturer is also the largest exporter with its sales footprint, or rather tyre marks, across over 100 countries in 6 continents. NSE FinWiz, with its theme Dream On, went on to interact with the employees of JK Tyres in New Delhi to revolutionize their thoughts on planning for their future.
Financial literacy becomes very important if you start at a young age, and that's the reason that when we talk about JK Tyre, the first our effort is to hire right people and then pay a right incentive. And when we talk about paying right incentive, that brings that need of investing that money, what we are paying to our employees, in the right way.
I think knowing about the options that are available for you to increase or save the money that you already have, I think that's financial literacy.
I would like to seek more advice on, like we have National Pension Fund, which I'm not aware of. Though there is a lot of information, but still there are many contradictory views on how to go for this scheme. So I would like to gain knowledge on this.
I'll be asking him regarding the mutual funds, which funds are best to invest on at this point of time, and looking in a future.
Welcome to Season 5 of NSE FinWiz, powered by CNBC TV 18. We're at the JK Tyres offices in New Delhi today, and our set of financial experts is here to guide the employees of the company to better financial health. Let's welcome the panel of experts today. Ankur Kapoor, Managing Partner of Plutus Capital, and Mehrab Irani, GM Investments at Tata Investment Corporation. Welcome, gentlemen. Our core topic of discussion today is the power of compounding. So first up, to introduce the young employees of JK Tyres to the power of compounding with respect to financial markets, can you please give them some examples on what the power of compounding can really achieve? Mehrab, would you like to start?
Say if you invest 10,000 rupees per month at 12% per annum for 30 years, it will become around 3.5 crores. Now, if you delay it by just 5 years you delay it and invest the same 10,000 at 12% per annum for 25 years, it will become hardly 1.9 crores. That is half the value. That is the power of compounding. So, in 25 years, to reach that same 3.5 crores, you have to invest double the money, almost 20,000 per month.
Right.
So that is so things which are important in life should never be at the mercy of things which are not important. And power of compounding is certainly one of the most important things along with asset allocation, and that is what I think everybody has to concentrate on.
So Ankur, while we are talking of the power of compounding, what are the different instruments where power of compounding works best? Like Mehrab said, the earlier you start, the better it is. So for first-time employees, what are the sort of do's and don'ts that you'd like to give out?
Well, I'll talk from an asset class point of view. Whenever we are investing into something which is fixed income, power of compounding works in that, but it works better in the case of equity over a long period of time. So having a combination of fixed income and equity can ensure that your asset value continues to grow at a reasonable rate. So growing your money consistently at 12% is a lot better than growing it at 20% one year, falling it down to 10% next year, or going in negative, and so on.
What are your do's and don'ts for those who want to make a quick buck off the stock market, and for those who are very afraid of investing in the stock market directly?
I strongly feel that it should be your full-time job if you are investing into direct equity. just investing basis what is written on newspaper or what is coming on CNBC or your whims and notions or so-called tips is probably not the right way of investing into direct equity. And for those who have not invested into equity, well, it's a good thing that you have not invested into direct equity because it is way too volatile. It can be managed, but only experts, only professionals can manage it. Only fund managers can manage it.
Right. Let's also talk a little bit about the time period. When does the power of compounding really kick in?
I see the power of compounding generally plays out after a few years. In the initial years, it may not look actually really relevant, but once you cross 5 years and more, then slowly it becomes really relevant, and then it starts kicking in. Also, you must have a different planning about your goals, whether it is short-term, medium-term, long-term goals, according to your different needs. And accordingly, you must do your asset allocation. And then the long-term goals have to be compounded at good rates. You have to invest in equity and certain growth assets, which will compound at, historically, they have done at more than 12% tax-free, so which will help you achieve your long-term goals.
Right. Okay, so let's take some questions of the employees of JK Tyres. The first one is from Anshul Diwan, who's Chief Manager MIS at JK Tyres, and his question is, what's the ideal ratio of investment between mutual funds or stocks and tax-saving instruments like fixed deposits or LIC or other instruments?
Well, there are various forms to it. One is your simple provident fund deduction that you see in your salary. Other than this, you should combine it with ELSS schemes and make it at least 1.5 lakhs. I also recommend investing in NPS. If you have not opened NPS account, you should open an NPS account and take advantage of additional 50,000 rupees, which will actually exempt 2 lakh rupees of your income. So you straight away, if you're on 30% bracket, you get 60,000 rupees as straight money. That is the first thing that you have to do. Secondly, once that is taken care of, one of the simple steps, if you have never invested into equity, is investing into mutual funds or a combination of exchange traded fund or index fund. I would put it like index funds. Index fund is basically investing directly in the market. Whatever Nifty or Sensex performs, similar will be your return.
Okay, so on that note, we are going to head into a short break right now, but stay with us because on the other side, our financial experts are going to tell us all about goal-based investing right here at JK Tyres in New Delhi. You're watching NSE FinWiz, powered by CNBC TV 18. Welcome back to Season 5 of NSE FinWiz, powered by CNBC TV 18. Today we are on campus at JK Tyres, New Delhi, and our set of financial experts is engaging with the employees here. In this segment, our experts are going to tell us all about goal-based investing. Now, this year the theme at NSE FinWiz is Dream On. All of us have dreams of all kinds. We want to travel the world, we want to buy homes, cars, pursue higher education and whatnot. The list is really endless. But each of these goals, of course, has a financial cost attached to it. So how does one really go about linking life goals with financial requirements at different stages of time, and when should this planning actually begin in our life?
Basically, the goals can be classified into, say, 3 segments: short-term goals, medium-term and long-term goals. So for your short-term goals, basically you have to invest more into fixed income and such related securities because time is not on your side. You can obviously invest some money into balanced funds, which are very good because they give you a flavor of both equity and debt, and they are most tax efficient in the sense that the debt portion is also tax-free. For your medium-term goals, you have to add equity to your portfolio. Balance fund again has to part of form. You have to do index funds, etc. And for your long term, I would advise that maximum portion has to be in equity funds because equity is purely the growth asset. So it will give you the maximum after tax return over the longer term, which will beat inflation as well. And one more thing everybody has to remember about contingency fund. I think at least 4 to 6 months of your salary should be in some kind of a liquid fund or a bank fixed deposit, which can be liquidated, within a few hours or 24 hours in case of contingency.
A lot of people, Ankur, especially in India, believe in investing in real estate and believe that it's a great investment to have in life. As soon as you're perhaps 2-3 years into a job, you're taking a huge loan, you're buying a house, and you're hoping that that's going to be your biggest investment in life. Is that the right approach or the right mindset to have in today's market?
If you're investing in real estate, again, you have to have the same lens the way you invest into equity. It's not easy. It is tough. Only experts can do it. Or else you have to be extremely lucky. If you're buying a home for self-consumption, that should never be part of your investment portfolio. So you should not really consume everything for the next 30 years just to build that house. Because then what's going to happen is all your long-term goals, your medium-term goals may not get fulfilled.
And as far as children's education is concerned, Mehrab, are there specific instruments, specific plans that you would recommend for pursuing higher education or even school education for children, because education is quite expensive today?
Inflation in education is much higher. It is like 12 to 15% depending on what. It is actually double the rate of the at least double the rate of the normal inflation. So that is one thing we have to keep in mind. There are a lot of children plans, etc., which are there. But rather than going into the details of that, I will advise that anybody who is planning for the children's education, say a longer term education, say after 10 to 15 years, higher education, foreign education, I think it's best to do in a normal good equity fund. I think the normal good equity fund or a multi-cap fund will give you the best returns over the longer term with minimum risk and volatility. So we have to understand risk and volatility also. So with contained risk, contained volatility, it should give you much better return and hopefully beat inflation and hopefully beat education inflation as well.
All right, so let's see what are the dreams of the employees here at JK Tyres. And this one is from Neeraj Malik, Senior Engineer, Customer Care Technical Service. The dream is to go on a two-wheeler road trip, and he wishes to accumulate about 5 lakh rupees, 10,000 a month next 2 years.
2 years it's very difficult for the power of compounding to operate. Particularly if you are investing in 2 years, you cannot invest much amount in, say, equity or growth assets because they are volatile in the short term. So you have to put major chunk into fixed income or debt products where the return would be much lower. So in 2 years to accumulate 5 lakhs with 10,000 per month might be a little difficult.
Let's also talk a little bit about long-term planning. Let's talk about retirement planning. What's the sort of mindset change that's required when we are looking at retirement planning? What is the corpus that we should be looking at building? Say, even if we have 25 years of service left, what's the corpus that we should be aiming at?
So 25 years is a good time. How much you should be investing is a question at the stage of life. So if you are single, today's living expense may not really be associated with what you would need after your retirement. But that may be a good starting point. Let's say you can start with 5,000, 10,000 rupees of investment per month and let it grow. But as life takes up, for example, you get married, you have kids, your living expenses will get realistic in nature. If you exclude all the home-related expense, home maintenance expense, and your kids' education expense, whatever is left, you should look at that value as living expense. Just multiply that, how much you would need for the rest of your life and start investing at that basic level.
All right. On that note, we're going to head into another quick break right now, but stay with us because on the other side, our experts will answer all the questions of the employees right here at JK Tyres in New Delhi. You're watching Season 5 of NSE FinWiz on CNBC TV 18. Welcome back to Season 5 of NSE FinWiz, powered by CNBC TV 18. Today we are at the JK Tyres office in New Delhi and we are engaging with the employees right here. In this segment, gentlemen, we are all set to answer the questions of the employees here. If any of you have questions, please raise your hands and wait for the mic to come to you.
What are the parameters of choosing a good mutual funds?
When you are selecting, say, an equity fund, first you look at the fund house. Who is the fund house below it? Second, you look at the fund manager and look at his long-term performance. Equities generally move in long-term cycles, like 7 to 8 years is every cycle which equity happens. So look at the fund manager if he is there in the market for at least 8 to 10 years and how he has performed across the cycle. Also look at the fund, how that fund has performed across the cycle. Don't just look at last quarter or last month or last weekly performance. That will not help you because you are investing for your long-term goals.
Okay. Anyone else?
If we invest in the PF, the interest rate is 8%. And if we invest in the PPF, the interest rate is 7.3%. So I just want to know in which stock we really have to invest because inflation rate is also 7% and 8% here. So my purchasing power at the end is getting reduced.
As you said, inflation is 7 to 8%. So if you see historically, the Indian equities, the Nifty or the Sensex over longer periods has returned more than 15%. So that is the historical average. So assuming between 12 to 15% compounding in equity over very longer time, 8-10 years and more than that, I think that you would be comfortably able to beat inflation. So look at the asset class, invest in equity. If you don't have time and energy to directly invest to good equity mutual funds, and I'm sure over longer terms you'll be able to beat inflation very comfortably.
All right.
Usually we used to heard earlier that investment in gold is also a good option, but now nobody talks about it. So what do you think that if we still invest in the gold and the fixed assets, so is it a really good idea?
Gold is a commodity. Its pricing is determined by the demand and supply, and it is a hedge against equity. So if the equity is rising, I'm talking of the global equity, it's a global commodity. If the global equity is rising, gold will not rise. It will be stable. That's why you'll see that it's not rising for the last couple of years now. But again, from an investment portfolio point of view, it should not really feature. I think a combination of equity and debt will actually meet the objective.
All right. One question right there.
What should be the criteria of selecting investment options?
If you reflect on your goals, you will actually have a very clear idea in terms of what is short term, what is medium term, what is long term. Break it down further. What is your need, what is your want, and what is your aspiration? If it is a short term goal, it should be 100% into a debt category. It can be a fixed deposit, it can be a debt fund, ultra short debt fund. We get into that 5-year plus, which is a medium term to a long term category. In that, there should be combination of debt and equity depending upon your objective. See, we often say this thing that, for long term it is equity. When you are into equity, you have to be for very, very long time. And if that long time increases beyond 8 years, 10 years, better it is.
Yes, gentlemen, right here in the first row, please.
Investment planning and distribution will go separately. It won't go in hand. What do you think would be the future in India? Do you think that investment planning will be chargeable separately, and will it work in India?
There are issues in the existing market, but we are seeing gradual change in the market, both at people getting willing to pay. There is distribution work, but that distribution work is also getting changed. A lot of automation is coming. There are various platforms where you can just create login, basis your Aadhaar, and you can start investing. There are already around 45 companies operating in India at this stage, doing this kind of work, both in the form of regular and direct. And I'm of a very, very strong view that in next 5 to 10 years, you will see that there will be a whole lot of change on the advisory front.
All right. One last question.
At this level, Sensex is trading at a high level. Still, you feel as a new entrant to enter into this market and invest in mutual funds?
If you have to invest monthly, you don't have to worry about where the market is right now. You just invest because at the end, you will get the average cost price. If you have got bulk of money, it needs to first park into a debt kind of category and then gradually invest into equity. You will never be able to figure out what is a good time and what is a bad time. India has always been an expensive market. However, that should not deter you from your long-term, medium-term planning of monthly investment. If you have to make bulk of investment, probably this is not the right time to invest.
With that, it's a wrap of this episode of NSE FinWiz, powered by CNBC TV 18. We'll be back next time with a lot more insights. Till then, invest smartly and grow your money. Thanks for joining us. Goodbye.
Although compounding was something which is very logical and people understand it inside out, and you can saw it from the house, people were interested. People were really not acquainted with the long-term goal setting. So that was an eye-opener for me, and I think it was an eye-opener for the entire house. I mean, how long-term goal setting is something we should be looking at, and yeah, that's how it is.
I believe that the show was very informative, and I could get a good glimpse of what I need to do with my portfolio, how diverse I can go, and what all avenues I have to invest.
Key learning of this interactive session is that be patient when you are investing. Unless you will not have any patience, then you will not earn any good return.
Focus, ideate, innovate. Enable.